Blessed Squad, what's going on with y'all, man? It's your boy, Blessed Applesauce here to bless y'all with another video here on Blessed to Invest. And as you can see from the title, we're here to talk about big money, big bags. What we're gonna do, we got a lot saved up at this point. We got $10,000. What are we gonna do? So you saved up 10 grand and you're thinking, should I save it? Should I invest it? Where should I invest it? Blah, blah, blah. So today we're gonna talk about what you can do, how to invest $10,000, the different ideas, the different options, and the different avenues you can take to invest $10,000. With this being a stock related channel, we have to talk about stocks, but we're going to get into it very soon. But before we do, of course, hit the like button on this video and sub down below. But without further ado, let's get into the video. All right, so starting off, the first thing on the list is you can always invest your $10,000 in a high yield savings account. A high yield savings account, and I'll put these two together. You can do a high yield savings account and you can do a bond. With 2022, the way it's looking right now, where we have 7% inflation, these are not the best places to go right now when you're trying to invest your money. A couple of years ago, these were great investments. Everybody was talking about them. Oh, put yourself in a high yield savings account where you can get 3% on your money, which is pretty good just from having the money just sit there. You get 3% on it every year. Or you do like a bond or something where you're getting a couple of percentage points as well, maybe like 1 or 2%, 3% maybe, depending on the bond. But now with these investments, currently with inflation being 7% now, these are not great places to invest your money right now. So maybe you come back to this video in like 2027, these will be back to being good investments again. But for right now, these are not the greatest places to go. I just want to put that out there because I know some people do want to invest by putting in the high yield saving bond, or they're looking at bonds and like, okay, maybe I should throw it in bonds. But it is a good idea, but not for right now, not for this current climate with 7% inflation. Is literally going to wipe out any profits that you make on either of those things. So the question is, where do we put it? So the next place you can go, the simplest place is a IRA or some type of mutual fund. These mutual funds usually have like a minimum to them. Maybe it's like a $500 minimum, $1,000 minimum. But if you're working with $10,000, a mutual fund is going to be really beneficial for you when you want to invest $10,000. Sometimes what they'll do, they'll put you on like a payment plan where you can invest maybe like $50 every month or like $100 every month, which I highly recommend to do just to get consistent, where you're able to dollar cost average into the stock market, where you're not just buying at one price. You'll buy a little bit in March, a little bit in February, a little bit in April, you'll buy a little bit in June. And what that does is it averages out the price, so you're not just buying at the very top and you're not just buying at the very bottom. So it gives you a nice little middle range, so you're not trying to time the market, which is really helpful. But if you're doing $10,000, you can just throw the whole thing in there, and it should be fine. But I do recommend on top of that, just consistently adding to it. The $10,000 can be like that base for you. Also, you can do IRAs. Me personally, I would look into IRAs first. If you're looking between mutual funds and IRAs, with an IRA, you have to make sure you're making less than $125,000. If you are not, just throw IRAs out the window. Like don't even look at them. If you're making over 125, forget what I said about IRAs. Just go straight to the mutual funds. But if you are making less than $125,000, go with the IRA first, because with that money, it's you're not going to get taxed on it. So once you put the 10 grand in there, they're not going to tax you on any profits that you make on top of that. So that's going to be really good. So if you put $10,000 in and then the IRA blows up and then you make another 10, 20 grand on it, you're not going to get taxed on the extra 10, 20 grand that you just made. So that's really beneficial. Really love that. I really think everybody, whether you have $10,000, $5,000, $500, you should put some money in the IRA, whether it's a little big, little, whatever. But that is one thing you can do with your $10,000 to really get it jump started. So the next one you're going to look at is the simple index fund. And the way I'm ranking these, they're just getting better and better and better. So the savings account was like kind of weak. Savings, bonds, those are kind of weak. And then the mutual funds, they're cool. And then the next one that I really like is the index funds. The index funds are really nice because you're just buying a basket of stocks, where you're buying, which I recommend buying the SPY, which is the S&P 500 index, where it's going to give you the top 500 companies in the market. You're going to give a little bit of Apple, a little bit of Microsoft, a little bit of Walmart and stuff like that, a little bit of Amazon. It's going to put you in the top 500 companies. And you're going to get a little piece of those companies. So if a company doesn't make it in the top 500, it's immediately going to drop it out of your portfolio and replace it with the next top 500 company, which is really beneficial. And the good thing about index funds, unlike the mutual funds that we talked about, is going to be less fees on it. So with mutual funds, you might have to pay your broker or your manager maybe like 2% or something like that. With the index fund, since it's automatic, it's kind of automated in a way, so you don't have to pay those fees, which is really beneficial. So limiting your fees, and it's just automatic. And usually, on average, about 50% of the mutual funds, the hedge funds out there, don't do better than the index. Just having in the top 500 companies, calling it a day, avoiding all the management fees. Most of the time, you're going to do better in the index than you are in your mutual fund. And on average, that's going to give you 7% on average. That's the average. 2021, we did do 30% returns in the index. So if you were sitting in the index, you're sitting pretty right now. Life is good. Everything's going good in the index. $10,000, you just made an extra $3,000 on the year, that's pretty impressive. I'll take an extra $3,000 on the year just for sitting on my behind. So love the index. All right. So next one we are going to look at is the self-brokerage account. And this one I do want to make a separate video on, because I really can dive into this a lot more. When you're managing, let's say you're managing $10,000 by yourself. You don't have any managers, you don't have an index. And I'm gonna link that to up here, because that's gonna be the very next video I do. But for your $10,000, you can put it into a self-directed brokerage account. Places like TD Ameritrade with Thinkorswim, places like Fidelity, where you have their own brokerage platform, places like E-Trade, or maybe you want to do a little bit of like Centerpoint Securities, or like Dosh Trader. One of those programs where you are personally managing your money. The same with like Robinhood. You can do Robinhood as well. I don't really like the charts on Robinhood, but Robinhood is another option that you can do for those self-directed investments account. This one is a little bit, it takes a little bit of work. Unlike the previous ones where you either have a manager doing it or you have it automatically doing it for you. This is going to take some education to learn how to do. You're going to have to understand the charts. You're going to have to understand the companies that you're investing in. You're going to have to understand, like, if the price earnings messes up or the stock drops for some type of reason, you're going to have to do that on your own. So with that one, I highly recommend just everybody have their own brokerage account, just so you understand what's going on with your money. You have an idea, even if you have your own mutual fund, you can kind of discuss it with your financial planner and be like, maybe we shouldn't make this move because I've seen the market, and y'all can teach each other. He's not gonna, the manager isn't gonna just be telling you what to do. You'll have an understanding of what's going on. So definitely do a self-managed brokerage account. Those are great, and the returns can be a lot higher, especially when you get good at it. It's gonna take some time to get good at it, so expect to lose. I'm just saying, expect to lose. If you're putting 10 grand in, expect to lose like 1,000. But once you get comfortable with it, you're gonna build it up. And I will do a separate video on this, exactly what to do. I'm gonna do like a sample breakdown of like some sample portfolios that you can create. That's gonna give you some really good returns. So stay tuned for that. But definitely self-directed brokerage accounts are really good. So the next one we're gonna look at is one that is near and dear to my heart, because I'm looking at properties right now, is real estate. Real estate is one of the best investments probably in the world, in the United States, really. It's great because there's a tax benefit around it. Same with the IRA that we talked about before. There's a lot of tax benefits and tax breaks that you get when you're investing in real estate. On top of that, you can use leverage. So with you putting $10,000 in, you can go out and buy a $100,000 property because you're leveraging your money. When you get into real estate, it's really not beneficial to go in. Let's say you have $100,000 and just want to throw the whole $100,000 into one property. With that, the returns are not going to be as high. So let's say you're in the stock market and you're making 7% returns, and if you put the whole $100,000 into a property, it may average you maybe 2% returns on your money, which isn't that great. But when you use leverage, you put 10 grand into it instead of 100 grand, and then get a loan for the 90,000, your returns can be a lot higher, where you can get that 10%, 12%. So real estate is one of the best investments because not only are you able to borrow money, so you don't need to put up the whole amount. There's also tax benefits for you purchasing real estate, and then on top of that, the renter that you put in there will pay down your debt. So at the end of 10 years, 20 years, you'll look back at it, and now you'll own $100,000 property that is all yours, where you literally just 10x your money in like 10 years, which is crazy to me. You're not going to get those type of returns in the stock market unless you are using a self-directed brokerage account where you're taking some skill, you know what you're doing with your money, or you just have a really good mutual fund or hedge fund manager. And if you do, let me know, hit my DMs, because I want one of those guys too, to 10x my money in a couple years. Let me know, because I'm looking for one too, if you can find it, for real. But real estate is one of those great investments to get into, to invest your $10,000. I really would look at that like one of the number one places for sure. Next one that I was looking into is also peer-to-peer lending. This one you can kind of get like interest for your money, which is cool, where you are investing your money in people that have like business ideas and business startup, where you can go in, let's say, because some of these places have like $1,000 minimums, where you can go in, you give somebody $1,000, let's say they're buying, I don't know, like camera equipment or something like that, just off the top of my head. You buy some camera equipment, and they say they're going to take photos, and with these photos they're going to make 10 grand off the photos. So with that, they're going to give you a 10% return on your money for you putting in $1,000. That is one option you can do with investing your money. There are a different type of websites you can go on. A couple of them I looked up were Lending Club and Prosper. Those both have minimums on it, but I would look into that if you are looking to do some peer-to-peer lending. Just be aware that some of these businesses may not pan out, they may not be that good, so just be cautious about burning your money in some of these investments, but definitely some of them can pay out. Even if you have like a friend or somebody you may know, you may connect with somebody and say, hey, I need 10 grand or 5 grand for like a business venture. This is your opportunity to put that in there and say, okay, I trust you. You can get 10-20% returns on your investment. That would be great. And with these things, the returns are going to be a lot higher because you're investing in a business where those returns can, where you can get that. Whereas in stocks, you're not going to get crazy 50% returns as much. Usually you're going to get those returns in business where they can flip your money quicker, where they're selling a product or a good, or you're like one of these private investors at that point where you can get those type of returns. So definitely peer-to-peer lending is really cool, and networking with people when they have these little small local businesses that you can invest in. All right, so next one, last but not least, which is really, really important, is you can also invest in your education. I have a quick story about this. Investing in your education is really, really important. When I was learning stocks, when I wanted to learn the stock market, how it worked, I took a handful of courses. I bought maybe about 5 or 6 courses. I bought them from YouTubers that you probably watch now. some of these courses were bad. I'm not going to say any names because some of the courses were kind of cash grabs and you kind of waste your money. But some courses out there are pretty solid. They're going to give you solid information where you're going to be able to learn something, and you're be able to take this information and reinvest in yourself and build a nest egg from just taking the information from the course. So taking $10,000 and dividing it up, and maybe you want to get into maybe my friend of mine wants to get into like the vending machine business, and another friend wants to get into like the hauling business. Maybe you could take some money and look at those different business ventures you've been interested in and say, okay, let me go talk to somebody that really knows what they're doing, and let me give them some money to coach me or show me or point me in the right direction of how to build this up where I want it to be. And when this one is really good, these are going to be their highest returns. These are going to give you your 100% returns, your 200% returns, where you're investing in yourself. You invest $2,000 in a course, and then you make it back. You double, triple your money in the next year or something like that. And I also want to give like a quick story time for a course. Anybody knows of a big stock trader? His name is Umar Ashraf. I hope I'm saying the last name right. His course was $2,500. I remember purchasing the course a couple years back. It was so detailed. Like when you think of, oh wow, it's $2,500, a lot of people are kind of hesitant about spending that type of money when they're not sure if they're going to get a return, or unsure they're going to get their money's worth. And it's something about putting your money in where you're dedicated, you're committed to it at that point, and you're ready to put the work in. And that course was just so detailed. It took you literally from A to Z. It took me through like the mental concepts of trading, the details of trading, and it was really cool. So don't look at just, oh, I'm putting my money in expecting to lose it. It really is an investment. You're putting your money in and you're expecting to get a return on your investment by putting the work in and doing the due diligence with the coaches and whatever they have for the course. So that is my list for what you can do to invest $10,000. If you have a bigger list or have some other ideas, let me know down in the comment section below, where we can have a community. That's what we're about. We're having a community of people that invest their money, grow their money, and create great lifestyles for themselves. So if you have any ideas, let me know, because I need some as well. Like if you got something I missed, I might want to invest in something. So let me know. And also sub down below and hit the like button, of course. And that's going to wrap it up. It's been your boy, Blessed Applesauce. Stay blessed. And we'll see you next time on Blessed to Invest.
Just to see tomorrow is a blessing. Stay prayed up is the message. Everything about a nigga blessed. Everything about a nigga blessed.